Josh Brown from Owings Wealth Management is still with us, and Malcolm Ethridge from CIC Wealth joins the conversation. Gentlemen, thank you very much for being here with us. Malcolm, since you're just joining us, I want to give you sort of the first crack at your take on what happened here today and here this week. What do you think? Have we put the bottom end behind us now that we know with certainty what has happened with Russia and Ukraine? The invasion has happened, so at least that card has been played?
Yeah, it's really early days. I agree with what I saw Josh just got done saying, which is that it's too much going into the weekend uncertainty. The next 2 days could be very pivotal in what happens in the market. But I would just say that the last 72 hours, or maybe the last 3 trading days, let's call it, have taught us anything. It's that trying to perfectly time the markets are a fool's errand, right? If you logged into your brokerage account and decided to suddenly make changes because the market was down crazy at the open yesterday, you missed out on the swing back, and you definitely didn't jump back in at the open this morning, which means that you also missed about a 2.5% increase, coming into this close. And so if anything, the last couple of days should have proved to people that trying to perfectly time the markets, it doesn't happen that way.
Yeah, Josh, I mean, the fact that every S&P sector finished markedly higher in the green. I mean, we saw Treasury yields tick back up today. We saw gold come off. We saw crude come back off. So not like a full risk on trade, but still quite a rally in general. Where do you see the opportunities here as we go into another weekend, starting next Tuesday, another month?
Well, I want to just tell a very, very quick story from the legendary Art Cashin, who talks about early in his career in like 1960, in the run-up to the Cuban Missile Crisis. One day, a rumor hits the floor that the missiles are in the air, like they're coming for the continental U.S. And he's running around with sell orders. He's trying to get sales done. And his boss collars him and says, "Oh, Arthur, what are you doing?" He says, "What do you mean, what am I doing? The missiles are in the air. I'm selling." He says, No. You buy the missiles in the air, because if it actually happens, don't worry about it, right? It's over, game over. But if it doesn't happen, you're going to get this massive relief rally. You got to be long the missiles in the air. And I think there's something to that, even to this day, 50, 60 years later. Art told me that story 12 years ago. I never forgot it.
Ooh, that's a good one, especially given the circumstances we've seen unfolding this week. Everyone stay with us, because we're going to get to Washington now, where Eamon Javers has the latest on Ukraine. Eamon.
Morgan White House Press Secretary Jen Psaki confirming in the past few minutes that the United States will impose sanctions on Russian leader Vladimir Putin himself, emphasizing that the U.S. is following European leadership on this.
Following a telephone conversation President Biden held with European Commission President Ursula von der Leyen, and in alignment with the decision by our European allies, the United States will join them in sanctioning President Putin and Foreign Minister Lavrov and members of the Russian National Security Team.
So Putin and Lavrov now facing sanctions as individuals, as well as all of the additional sanctions that the United States has put in place this week. Meanwhile, as companies across America are on watch for cyber blowback from the Russian invasion, the tech company NVIDIA confirmed to me just moments ago that it is experiencing a cyber, quote, incident, unquote, but not offering many details on what's happening. So it's impossible to say who, if anyone, is behind it at this point, says a spokesman. Our business and commercial activities continue uninterrupted. We are still working to evaluate the nature and scope of the event and don't have any additional information to share at this time. So, guys, it would be premature to necessarily say this NVIDIA incident is in any way linked to the expected cyber attacks that a lot of people have been focused on from Russia, but they are confirming that something, at least, is going on. Back over to you.
Wow, there's an awful lot to sort through here, Eamon. I want to start first with the new information that you've been providing us about the United States' decision to sanction President Vladimir Putin himself and the assets. Why did we wait for Europe to make this move first?
it's an interesting question, right? I mean, I think there may have been, and this is a little bit of speculation on my part, but there may have been some concern that the Europeans were not fully on board with that decision because of just how intertwined Russian oligarch money is in a lot of European economies, and that once the Europeans were able to come along to that, you could see where the United States would want them to go first and give them sort of full credit politically for doing that, and then present the United States as following on. But the administration is not saying now. What you heard from Jen Psaki just there is that followed a consultation between the U.S. and the EU, and the U.S. is now following the European Union. I think that the sequencing of those may have some political significance, but we'll have to wait for some more reporting to bear that out.
Eamon Javers, thank you. Turning back to our panel now, Malcolm, I want to get your take on some of these cross currents where geopolitics are concerned, how you navigate them as an investor, especially when you are talking about the potential for cyber attacks on critical infrastructure, how the concept of critical infrastructure is changing, and then, of course, so many industries now trying to figure out the sanctions picture as well.
Yeah, so it makes it very tough to predict whether this actually is the bottom that everyone's hoping for, everyone being, traders who are looking at moving money from safe havens into the market. It makes it tough to predict that. But for context, we look back at what happened in 2014, February, March 2014, when Russia did a similar thing to Crimea. And essentially, by the July 1st holiday, the market had sort of roared back. The S&P, had roared back about a 5 or 6% increase from where it fell off when we initially heard the announcement that, Russia had decided to invade Crimea. And so, history doesn't necessarily guarantee us anything about future performance. But if we just looked at that for a second, it probably smacks of similarity, where maybe we're overreacting a bit right now to how much of an impact this is going to have on our markets here more broadly. U.S. and even in Europe. But I think it's really important to make sure that we understand that we just really have no idea just yet, because we have no idea how many cards Vladimir Putin has left to play.
Josh, there seems to be an awful lot of volatility this week. I guess not the last session and a half where we almost seemingly went straight up from after hitting those lows in the last 2 days. Does the volatility here present opportunity for you or more risk? Because earlier on, when you were answering our questions about where we stood in the market today, you sort of acted like, yeah, the run is nice. You didn't feel super confident to me. Do you like this volatility, or are you more wait and see?
Well, whether I like the volatility or not, it's a permanent feature of what we do. So you have two choices. You can let the volatility affect your emotions and your mood and keep you from doing what you're supposed to do. Or you can say, you know what? I'm a forced buyer of equities for the next 20, 30 years. I'm a long-term investor. I have no choice but to put my excess savings in stocks. Bonds ain't going to get it done, especially at prevailing interest rates. So why don't I make volatility my friend? And so there are a variety of ways of doing that, ranging from simple to complex. The simplest thing you could do is not change anything at all. Continue to make your 401k contribution. Continue to rebalance into bad markets, buy more stocks, and vice versa. And then there are more complex things you can do. We run a tactical asset allocation sleeve for high net worth clients. It's rules-based. My opinions don't go into it. I think it's a great tool. There are other things you can do, like in the options market. You can take these volatile moments and make hay in the form of selling expensive premiums. So I think everybody's got to figure out their own answer to that. But the one thing that we don't have a choice of is the fact that this is how it is. You don't get 13.5% average annual returns for the last 10 years for nothing. The price you pay is having some gut-wrenching moments, and you can't really dance in and out of it. You either have to say, I accept this, or maybe stocks aren't for you.
Yeah, well, your opinions do matter to us here, Josh. That's why we have you on so much. But before we let you go, we want you to zone in on your best trade ideas right now. Birthday boy, Josh, we're starting with you.
Okay. I recently bought Restoration Hardware. I bought it for like 50% lower than its all-time high that it reached last year. The stock has been absolutely creamed. I think I'm in good company here. Berkshire Hathaway now owns 8% of this company, and it's only an $8 billion market cap. Like, it's literally tiny in relation to almost all of Berkshire's other holdings. I don't know if this is Ted or Todd or Warren Buffett himself or the guy that sweeps up at night, but it occurs to me that this is a perfect Berkshire-type business. The membership fees that their customers pay keep their customers loyal to the brand. They're catering to the high end of consumers. It's not quite as cyclical as you might think it is. I think there's a secular tailwind for anything housing related, and I think luxury goods stay bid for as long as there's this much liquidity in the current economy. So I like buying stocks at half of their former price, and I think I'm going to do okay with this one. I don't have a lot of it, but I do plan to continue adding.
Okay. Malcolm, what's your pick?
Yeah, we're actually really big fans of Amazon, the runt of the litter of the big mega cap tech stocks last year, because the outlook for Amazon, they announced their first share buyback in over a decade last month. And beyond that, we also see the company's recent decision to disclose advertising revenue and detail capital expenditures by category as a prelude that, maybe Andy Jassy will actually begin to break out the numbers on AWS, which some analysts estimate could have an enterprise value of up to $1.5 trillion on its own, right? So for context, Amazon right now, its enterprise value is estimated at $1.6 trillion as an entire company. So if they just unlock the value that AWS has in there, that could spell, a pretty strong year for Amazon shareholders.
All right. Two names with consumer-facing businesses attached. Thank you, Malcolm Ethridge and Josh Brown. We are just getting started on the second hour of Closing Bell.